let's look at example 1.1. Thanos Limited manufactures 2 products in a joint process. During May 20X4, 500 units of raw material were processed at a joint cost of 600,000 Rand. 1 unit of raw material yields 4 liters of SM and 6 liters of BW. The products can either be sold at the split-off point or after further processing. All right, so let's go and put all of this information onto a diagram. We've got 2 products coming out of a joint process. The one product is SM and the other one is BW. We have a joint cost of 600,000 Rand. We know that 500 units of raw material were processed, and we know that 1 unit of raw material yields 4 liters of SM and 6 liters of BW. So if 500 units of raw material were processed, let's calculate the number of liters that we'll have for SM and BW respectively. So for SM, 1 unit of raw material yields 4 liters. So if 500 units of raw material were input into the production process, that will yield 2,000 liters. And for BW, 1 unit of raw material yields 6 liters. So if 500 units of raw material were input into the production process, that is going to give us 3,000 liters of BW. All right, so the raw material input is 500 units at a joint cost of 600,000 Rand. All right, and we were told that these products can either be sold at the split-off point or after further processing. You are then given the selling price per litre at the split-off point. You are also given the selling price per litre after further processing, and we have the further processing costs after the split-off point. So let's put all of that information onto the diagram. So let's first put the selling price per litre at the split-off point. So if these products are sold at the split-off point without further processing, SM can be sold for 1,215 Rand per litre and BW for 690 Rand per litre. However, they don't have to be sold at the split-off point. They can also be processed further and then sold after further processing. So if they are processed further, the selling price for SM is then 1,500 Rand per litre, and the selling price for BW is 900 Rand per litre. But then we also have some further processing costs. SM has further processing costs of 1 million Rand, and BW has further processing costs of 700,000 Rand. There is no opening inventory, and total production for the month was sold. All right, so again, if we just look at the diagram, for SM, 2,000 litres were produced, total production was sold. So 2,000 litres were produced and 2,000 litres were sold. There's no opening inventory. If they sold everything that they produced, there's obviously also no closing inventory. So this is a very simple example. Production is equal to sales, and we don't have any opening or closing inventory. The same logic applies to BW. 3,000 litres were produced. Total production was sold, so 3,000 litres were also sold. There's no opening inventory, so if they produced 3,000 litres and they sold 3,000 litres, we also don't have any closing inventory. Then in the first part of the required, you need to allocate the joint costs using the physical measures method. So guys, in this example, we have a joint cost of 600,000 Rand, and that joint cost needs to be allocated to our two joint products, to SM and to BW. We can't trace this cost to the product. We don't know what portion of the cost relates to SM or BW. So what we need to do is, in our lecture, we said we have 4 different methods that can be used to allocate joint costs to joint products. So the first method that we are looking at now is the physical measures method. Now, if you go back to your lecture notes, if we are using the physical measures method, that means that joint costs are allocated in proportion to production volumes. All right. So we have already calculated our production volumes. There's our production volumes over there. So this is a very simple calculation, guys. You start with your production volume. Calculate the total production volume, because we need to calculate a proportion to the total. Or in other words, we need to calculate the percentage for SM and the percentage for BW. So for SM, we say 2,000 litres divided by 5,000 litres, that gives us 40%. For BW, we say 3,000 litres divided by 5,000 litres, and that gives us 60%. So using the physical measures method, we allocate the joint costs in proportion to production volumes. So we take the joint cost of 600,000 Rand, and 40% is allocated to SM, and 60% is allocated to BW. You can then calculate the joint cost per litre. That's a very simple calculation. Just take your joint cost that you calculated and divide by the number of litres. And you can see if the physical measures method is used, we get the same cost per litre for both products. Both SM and BW have a cost of 120 Rand per litre. So let's discuss this method in a bit more detail. You saw when we just looked at the calculation now, this method is very simple to use. However, it does have a few limitations. First, it can't be used where there are different units of measure. So for example, you can't work with units, kilograms, meters, liters, etc. You have to work with the same unit of measure. So in this example, it wasn't a problem because both products are in liters, and therefore we can use the physical measures method. However, this method can't be used if you have different units of measure. So if products consist of solids, liquids, and gases, it might be difficult to find a common unit of measure. Another limitation of this method is it assumes the same cost per litre for each product. We saw that above. Both products have a cost of 120 Rand per litre. Now the problem with this is it could cause misleading profit calculations where the products are significantly different with different selling prices. So let's discuss that in a bit more detail. We were given the selling price for both products at the split-off point and also after further processing. And you can see, regardless of whether the products are sold at the split-off point or after further processing, SM has a much higher selling price and BW has a much lower selling price. So if the selling prices are so different, these products must be quite different. So if they're very different, it doesn't make sense that they have the same cost per litre. And this could cause misleading profit calculations, because if SM has a higher selling price, obviously then we are going to have higher profits, and if BW has a lower selling price, we will then have lower profits, because both of them are being allocated the same joint cost per litre. And the next method that we are going to look at attempts to overcome this limitation. So with the next method, we are going to allocate the joint costs using the sales value at the split-off point method. So if you go back to your lecture notes, if we are using the sales value at the split-off point method, joint costs are allocated in proportion to the sales value of production at the split-off point. All right. So all we need to do is we need to calculate the sales value at the split-off point. So take the selling price per litre and multiply by the number of litres for each product. And then using that, we'll allocate our joint costs. So calculate the sales value at the split-off point for each product. That's a very simple calculation, guys. Then calculate the proportion to the total. So calculate the percentage for SM and the percentage for BW. Then allocate the joint costs using those percentages. So 54% of the cost is going to be allocated to SM and 46% of the cost will be allocated to BW. Then once again, you can calculate the joint cost per litre just by taking the joint cost and dividing by the number of litres. All right, so you can now see the products don't have the same joint cost per litre. They now have different joint costs per litre. The product with the higher sales value, SM, with the higher sales value, is now allocated more of the joint costs. And the main limitation of this method is it assumes that the sales value determines prior costs. So just because SM has a higher sales value, why should it be allocated more of the cost? The sales value doesn't necessarily determine the manufacturing cost of a product. So please make sure when you are studying all of these methods, you can perform the calculation and you also understand the limitations associated to each method. Then for the third method, we now need to allocate the joint costs using the net realizable value method. In this example, the products could either be sold at the split-off point or after further processing. However, you might be faced with a situation where the products can't be sold at the split-off point and they must first be processed further before they can be sold. Now, in a situation like that, you won't have the sales value at the split-off point. So you won't be able to use the second method where we allocated the joint costs using the sales value at the split-off point method, because that information is obviously not available. So that's where the net realizable value method comes in. Using the net realizable value method, we are going to work backwards and estimate the sales value at the split-off point. So go to your lecture notes. If the net realizable value method is used, joint costs are allocated in proportion to the net realizable value at the split-off point. If the products can't be sold without further processing, then the sales value at the split-off point may not be known. And then obviously you won't be able to use the second method of allocation. If this is the case, we can estimate the sales value at the split-off point by working backwards. And we perform this calculation by taking the sales value after further processing. We then deduct the cost to complete and sell the product, and that will give us the net realizable value. So let's perform the calculation for our example. First, we need to calculate the sales value after further processing. So take the selling price per litre and multiply by the number of litres for each product. You then need to deduct the further processing costs, and that will leave you with the net realizable value. So you start with the sales value after further processing, you deduct the further processing costs, and that will give you the estimated net realizable value at the split-off point. And we allocate the joint costs based on the net realizable value at the split-off point. So if you calculate your proportions over here, you can see for SM we have 50% and for BW we also have 50%, because both of them have exactly the same net realizable value at the split-off point. So when we allocate the joint cost, we are going to allocate 50% to SM and 50% to BW. Then, I just want you to calculate the gross profit and the gross profit percentage, because that then shows you why the next method is important. So how do we calculate the gross profit? You take the sales value, you deduct the further processing costs, so take the sales value, deduct the further processing costs, and also deduct the joint costs. So for each product, calculate the gross profit. Take the sales value, deduct the further processing costs, and deduct the joint costs that we allocated. Then I want you to calculate the gross profit percentage. And remember, you calculate the gross profit percentage by taking gross profit and dividing by sales. So you can see this method of allocation results in different gross profit percentages for each product. They've got different gross profit percentages. Now the next method of allocation is going to allocate the joint costs using the constant gross profit percentage method. So if you go back to your lecture notes, the joint costs are going to be allocated so that the overall gross profit percentage is identical for each individual product. So after we've performed the allocation, you'll see both products will have the same gross profit percentage. So how do we perform this calculation? First, total cost of sales is calculated by applying a constant gross profit percentage. Then, further processing costs are deducted and the balance represents joint costs. So first we need to calculate the total gross profit percentage for the company as a whole. So we need to take total gross profit and divide by total sales. So if you go back to the previous example, there's total gross profit, there's total sales. Calculate the gross profit percentage for the company as a whole. And we are now going to allocate the joint costs in such a way that both products, both SM and BW, have a gross profit percentage of 59.65%. So after you've calculated the total gross profit percentage, you need to calculate total cost of sales as a percentage of sales. Now you can perform this calculation in one of two ways. Either you can take your total costs and divide by sales. So what are your total costs? Costs are made up of your further processing costs and also your joint costs. So that will be your total cost of sales, and divide by the total sales figure. So that will give you total cost of sales as a percentage of sales. Or alternatively, you can see the sum of these two percentages add up to 100%. So what you can do is you can say 100 minus the gross profit percentage, and that will leave you with your cost of sales as a percentage of sales. And obviously that makes sense because if you look at these proportions, sales is 100%, we deduct cost of sales, which we've calculated over here to be 40.35%, and that will leave us with gross profit, which is 59.65%. All right. Then, if you look at your lecture notes, the lecture notes say, first we need to calculate total cost of sales by applying a constant gross profit percentage. So let's calculate total cost of sales. In the first column, I obviously just have the sales value because we need the sales value in order to calculate total cost of sales. So the sales value just comes from the previous example where it was calculated. There's your sales value for SM and the sales value for BW. Then if we are trying to calculate total cost of sales, you just need to take that sales value and multiply by the percentage that we calculated above so that you can calculate cost of sales. So that is then your total cost of sales. And total cost of sales is made up of your further processing costs and also your joint costs. So we are then going to deduct the further processing costs. So take total cost of sales, deduct the further processing costs, and that will give us the joint costs that need to be allocated. Again, if you go back to your lecture notes, the further processing costs are deducted from the total cost of sales, and the balance represents your joint costs. So you'll see The total joint cost is 600,000 Rand, and we can see exactly what portion is allocated to SM and to BW. And by allocating the joint costs in that way, you'll see when we perform the gross profit and gross profit percentage calculation below, both products now have a constant gross profit percentage, or an identical gross profit percentage. So just remember, gross profit is calculated by taking sales, deducting further processing costs, and also deducting the joint costs. And the gross profit percentage is calculated by taking gross profit and dividing by sales. So this method argues that because both products arise from the same production process, they should earn identical gross profit percentages. But please note that this method is only appropriate if a constant gross profit percentage for each product actually makes sense. Then there's one other calculation that we need to look at. But please note, this is not a method of allocating joint costs to joint products. We have already covered the 4 methods that can be used to allocate joint costs to joint products. This is now a separate calculation. So in part 5, you need to determine the optimal production plan for each product. Now, if you're asked for the optimal production plan, you just need to determine whether the products should be sold at the split-off point or after further processing. So let's go to our diagram. Please note, guys, these joint production costs over here are not relevant to your decision. Regardless of whether the products are sold at the split-off point or after further processing, the company will still incur the joint production costs. So we don't take those into account. We ignore the joint production costs. They are not relevant. How are we going to perform this calculation? You need to compare the additional revenue that will be earned as a result of processing the products further to the additional costs of processing further. So it's a very simple calculation. If we look at SM, first calculate what is the additional revenue that they will earn by processing further. So the selling price after further processing is 1,500 Rand per litre, and if they don't process further, it's 1,215 Rand per litre. So calculate the difference in the selling price and multiply by the number of litres so that you can get the additional revenue that will be earned if the product is processed further. Then, that additional revenue doesn't come for free. That additional revenue comes at a cost. There's a further processing cost of 1 million Rand. So what you do is you compare the additional revenue that will be received if the products are processed further to the further processing costs. And for SM, you can see they will earn an additional 570,000 Rand revenue. However, the further processing costs are 1 million Rand. So by processing further, they are worse off by 430,000 Rand. So they should not process further. They should rather sell the product at the split-off point because they'll make more profits if the product is sold at the split-off point. If we perform the same calculation for BW, take the revenue after further processing, deduct the revenue at the split-off point, multiply by the number of litres so that you can calculate the additional revenue that will be earned if the product is processed further. Compare that to the further processing costs. So the additional revenue is 630,000. However, the further processing costs are 700,000. So this results in a negative 70,000 Rand. So in other words, the company will be worse off by 70,000 Rand if the product is processed further. So it should not be processed further, it should be sold at the split-off point. So both products should therefore be sold at the split-off point and not processed further. And you can see the discussion just below. I told you the joint production costs are incurred regardless of whether the products are processed further or not, so they are not relevant to this decision.